Hello, hello, everyone. Welcome. We have such an awesome turnout today. So first, I just want to thank everyone so much for coming, for taking the time to spend this morning with us. I also would like to take a moment to introduce myself. My name is Mackenzie Circa. I'm the Chief of Staff at Juniper VC, and I will be handling the logistics of the day. So I just want to remind everyone quickly to please keep yourself muted throughout this session. And if you have questions, I encourage you to save them towards the end because our lovely panelists will be leading different Q&A breakout rooms, and you'll have the opportunity to ask them those questions in a smaller group setting. So, I would also like to remind you that this session is going to be recorded. The panel is, the Q&A will not be, and so we encourage you to send out that recording to anyone you like when we send that out later today. Okay, I'm going to now turn things over to our moderator, Jennifer Kahn, who is the founding partner at Juniper.
Thank you, Mackenzie. Hello, everyone. It's so great to see you all. I'm excited to gather everyone here on DAF Day for us to talk about DAFs, frontier applications of DAFs for generating impact, and just for us to have conversations with those whom we don't get to meet in our day-to-day work. I am Jenny Khan, co-founder and general partner at Juniper. We are a venture capital firm investing in early-stage deep tech startups that accelerate the bioindustrial revolution. And we also have a nonprofit arm, Juniper Zero, that provides access to knowledge, know-how, and network to technical founders to help them get ready to raise institutional capital. The funding landscape in our world has changed so much this year, especially in America. What we are familiar with today is very different from what it used to be at the beginning of this year. But with change comes opportunities to make things better. And as we started to have open conversations about how we could find better way to fund impact and how we could help scientists and engineers and founders build enduring organizations that make the world a better place, we see a lot of enthusiasm in the worlds of philanthropy, in venture, to want to learn more, ask questions, help one another, and to work together. So today's conversation is really the first of many that we hope to catalyze and facilitate. We are partnering with our allies to do this work, including all the panelists who join us today. We have Emily Knight, President and CEO at The Engine, Danielle Capalino, co-founder of the Neta Foundation, Jennifer Trivelli, Senior Director of Communication and Marketing at Mission Investors Exchange, and Aaron Fitzgerald, co-founder and CEO of Mars Materials. So to get us started, perhaps in one or two sentences, the panelists could give us a quick overview of how your work relates to DAF. Shall we start with Emily?
Sorry, was muted. Hi, everyone. It's great to see you. My name is Emily Knight. I am the CEO and president of The Engine. We are a startup. We are a nonprofit startup incubator and accelerator. And so we are helping people at the earliest stages of technology development. Some of our programs even work with PhD students who are thinking about the commercialization pathway and highlighting what it looks like to take their technology out of academia and into the market. And so we think deeply about not just what that pathway looks like for the technologist as they're thinking about that, not just for the technology, but for all of the other elements that will be necessary, including funding. And so the earliest stages of technology development also need really patient capital. So we think a lot about where that capital can come from. And, with recent government pullback, it looks like we are trying to find alternative ways to find mission-aligned, program-aligned capital that can support these early-stage technologists. So that's how we're thinking about DAF Day and new forms of capital to support really incredible companies like Aaron's.
Danielle, would you like to go next?
Hi, I'm Danielle Capalino. I'm the CEO and co-founder of Neta. So how we fit in with DAFs is an easy one because we are a DAF sponsor. We are a donor advised fund sponsor, and we'll get more into what that means and what we do. We started Neta because I came from the confluence of two different worlds, running a family foundation, so the philanthropy world, and I was also an active angel investor and met my partner through the MIT Angel Investing Network, where we were both alums. And what we saw was that the system was really broken, and there was not an easy way to deploy philanthropic capital into for-profit businesses that were really meaningful. And so we built Neta. So we built an entire software infrastructure. We're a DAF sponsor, and we are purpose-built and specialize in being the pipes for bringing philanthropic capital into for-profit investing.
Jennifer.
Yes. Hi, Jenny. Thank you so much for having me today. Hi, everyone. I'm Jennifer Trivelli. I'm with an organization called Mission Investors Exchange, and we are a national network of foundations and other philanthropic asset owners, as well as their partners and consultants who are all dedicated to deploying more capital for social and environmental benefit. And so we have more than 350 organizational members at this time, which is thousands of practitioners. And they're testing new and catalytic approaches all the time. And so one of the vehicles that many of our members are looking at is DAFs and how to unlock more DAF capital and put it into the hands of venture and entrepreneurs and amazing companies. And so I look forward to talking more about that.
Last but not the least, Erin.
Yeah, thank you, Jenny, and happy DAF Day, everyone. And it's such a privilege to be here. I am Aaron Fitzgerald, CEO and co-founder of Mars Materials. We are a Houston, Texas-based public benefit corporation, and our backers include folks like Shell and Bill Gates' Breakthrough Energy Fellows program and many more. And we are working to transform carbon to clean, dirty water across an $11 billion and growing freshwater purification market. Our product, which is a chemical building block, uses captured CO2 as inputs, has decarbonization, defossilization, and a lot of in-use impacts at that gigaton scale. So one thing about scaling up a chemicals venture is it comes with many valleys of death. And oftentimes financial first instruments really struggle to support our work because we have an innovation premium that we need to leverage scale to drive down. Capital expense intensity can be a challenge to overcome. And then also beyond standard market kind of return timelines to actually scale up these really impactful ventures. So DAF offers a sort of catalytic capital that can help bridge that valley of death and get our company to the market to tap into would be more financial first returns.
To kick off today's conversation, let's start with the foundation. Danielle, can you tell us what is the DAF and why should donors, sponsors, and innovators care about that today?
Thank you. And thank you so much, Jenny and Mackenzie, for starting this conversation. And we were all sort of chatting before this. We're so excited about how much enthusiasm there is. Jenny said they had to increase their Zoom capacity to like there are so many people who want to be part of this conversation, and it's really awesome. And so you've really tapped into something. So I've actually stopped asking people when I'm having conversations, do you know what a DAF is? Because everyone says yes, and it turns out people don't actually know. So I'm going to try to keep this really simple. A DAF is a donor advised fund. It acts and functions like a charitable bank account. So if Johnny wants to open an account, she wants to send $1 million. She opens her fund. She gets $1 million tax deduction upfront. That money then can be used to make grants. And also, in the meantime, that money is invested. Typically, at many other DAF sponsoring organizations, that money is invested in the stock market. And we can do that too. But at Neta, we were purpose built to enable Jenny to use that money to invest in for-profit companies. The range can be, we can invest in venture funds, single entities, we can do recoverable grants. We have coined the term grant investments to encompass the span of what we do. So if Jenny wants to invest $100,000 from her DAF into, say, Mars Materials, she recommends that investment from her DAF. So $100,000 comes out of her DAF. It goes into Mars Materials as an equity investment into the company. And should there be returns, as we know there will be, on that investment, they will come back into Jenny's account tax-free. And her philanthropic capacity will now have grown X-fold. So, simple terms, a DAF is a charitable vehicle that you can use for making grants and doing private investing in this case.
Danielle, I have so many questions. I wanted to dive into how to make this work. But first of all, I'm curious. So DAFs is not something that's new, right? It's been known for over 100 years. But just recently it has become so popular. Why is that so?
It's a good question. I think that there are a few different factors at play here. One is, there's this great wealth transfer that's taking place. And I think that this next generations that is coming into wealth is really interested in using their money differently and having a more active and impactful experience with the money. There weren't tools like Neta, and there are other donor advised funds, but there weren't really tools that were available. So we're making it easier to deploy this capital in meaningful ways. And there's also been sort of an explosion in wealth and in private markets, and people have sort of realized that this is a real tax efficient tool. So I think a lot of the large financial institutions have realized that they want to keep the money in-house and have set up donor advised funds. So there's a lot of money. It is not infrequent that I talk to people who say, oh, I have a donor advised fund. Oh, I forgot that I had set up a donor advised fund. So there is, we talk about this, but it's a big industry. There's over $250 billion that are in donor advised funds. And not all donor advised funds enable you to do private investments. And one thing that I always say, it's easier than switching hairdressers. You can switch from one DAF provider to another because it's as simple as making a grant, because all DAF providers are nonprofit organizations.
Thank you, Danielle. And Jennifer, from your vantage point at Mission Investor Exchange, you work with a lot of both individual and institutional DAF donors. What does that look like, helping those donors deploy their DAFs?
So we are an educational network, and so we convene, our members exchange information, they network, and then we help elevate the work, and we're field builders. And so we see a lot of our DAF sponsors beginning to experiment in venture and taking really creative approaches with their capital. And because this is philanthropic capital, it's absolutely perfect for the venture capital space because it's charitable intention and it's able to de-risk. And when you talk about the valley of death and so forth, this is charitable to begin with. And so it's perfect. You would have zero return on a grant, technically, if you just gave the money away. And so, being able to catalyze something with a venture that you care about in an area you care about is really, really special. We have members that are doing this across the gamut of foundations and philanthropic asset owners. So beginning with community foundations, the likes of the Silicon Valley Community Foundation, the Boston Foundation, that are offering DAFs that are place-based often, although they're DAF sponsors that can make investments and grants to any 501c3 in the country. We also have DAF providers that are DAF platforms, and I can put some of the links in the chat. Impact Assets is one. I don't know if there's anyone from the Impact Assets crew on the call. Impact Charitable, an organization called FJC, a foundation of philanthropic funds that you may want to look into as a founder or as a donor, depending on which side of the supply or demand you're on. I think we have all types on this call today. But the donors are working with their DAF sponsors to channel this capital into, everything from clean energy ventures, EV infrastructure we're seeing, carbon reduction technology, many of the things that were talked about today. And it's really exciting. I think the challenge and the opportunity is that as Danielle mentioned, 250 billion in DAFs in the US, huge market opportunity, but it's very fragmented. And there are about 2 million DAF accounts in the US and about 3 million DAF donors, so couples or children of the DAF sponsor. And so very fragmented, and founders in many cases in the past have had to sort of go door to door to raise capital. But I think it's important as a founder to think about, if you're pitching, if you're raising a fund, your donor, if you're working at the family office, may have a DAF that they forgot about or that they didn't know that they could use for this. And so it is worth asking when you're making that pitch, do you also have a DAF? What else is your family office doing on the charity side? And oftentimes they will. And so I think conversations like today are really important so that those conversations can happen and the two sides can sort of come together and say, yes, we can invest in you, and we can also make a grant, or in some cases, there's a little bit of philanthropic jargon, but our members are doing things like PRIs, program-related investments, MRIs, mission-related investments. There's a whole sort of alphabet soup of what these tools are called and what they look like. But it's really exciting and worth exploring as you're trying to get dollars to keep your venture going.
Most people think that DAFs can only make grants to nonprofits, but DAFs can actually be used to invest in for-profit ventures. Danielle, can you help us understand how that actually work? How do donors and sponsors find these companies, and do companies need to change their existing structures to accommodate capital from DAF? Talk us through the nuance.
Okay, so I'll start with the end. No, the company does not need to create a new structure. And I'm going to give you a real example and make an exciting announcement at the same time. So, for a real life example, Aaron from Mars Materials, that we have on this panel today, has an amazing company, and he has incorporated a slide into his deck, just as Juniper was explaining, like adding it into the conversation. Look, you can invest with your for-profit dollars over here, and you can also invest through your DAF. So he's added a slide to his deck illustrating how the flow of capital works. And we're announcing today that through Neta, we have the first investor who's coming in to invest in Mars Materials through their DAF at Neta. So that investor, Neta, will be on the cap table. And so we kind of act like an SPV in that multiple different donor/investors can come in to invest in his company. It's live up on our website, netafoundation.org, if you look at grant investments. And so Neta comes in just like any other investor would, same terms. We're just a differentiated investor because we're a nonprofit. In this case, Neta is the accredited investor. And so yes, instead of investing in the stock market, which is not aligned with anybody's philanthropic values. You care about climate and the environment, and you want to help build a pipeline in this ecosystem of innovation, use your DAF money to invest for profit in a company like Mars Materials and have the returns come back. Those returns can come back into your donor advised fund, grow your philanthropic capacity, and you can use that money to invest in other companies or to make grants.
Amazing. Congratulations, Aaron. This is so exciting.
Yeah, that was a lot of fireworks and claps for us. Thank you.
Yes. Aaron, tell us more about how you found this particular donor sponsor. What are some key learnings that you could share with the audience on making this brand investment happen?
Yeah, absolutely. So thank you, Danielle, for sharing the announcement. It is truly exciting to test this proof of concept and also be able to deploy these funds to support Mars's growth. And I think that's ultimately why we're all here. We have impactful companies or funding support that is not being deployed in areas where it is actually adding value and unlocking tremendous impact. And being able to leverage these capital vehicles is a big key in that. So as Danielle mentioned, we are raising a round and we received our first grant investment from Neta. As she explained, really the conversation went as similar as we have when we're talking to more financial first investors. We gave them a pitch that was interesting. We had the tough questions back and forth. We went through the data room review, provided all the details, and again, some more back and forth in that due diligence process. And then ultimately, an investor decided to support our open safe instrument. And that instrument itself had been set by more of a financial first VC, Pachamama Ventures and the Houston Angels members. So I think that gave also some confidence around the terms and to ensure that there wasn't really abuse in maybe the valuation and all those other aspects that I think can sometimes be perceived as a risk when you're thinking about leveraging catalytic capital in early stage companies. So ultimately, outside of all that, work that really is just my traditional work as a founder, and coming up when our additionality case really built around what I mentioned earlier about a chemicals company, the CapEx intensity, having to scale up and increase your learning curve to drive costs down, and other aspects associated with that made the pitch, resonate and stand out, and got us that support. So what I would say, if you are a DAF holder, go to Neta's platform. We would love your support, but there's also other companies on there doing some impactful and incredible work, looking to also get support to accelerate their growth. And if you're a founder, reach out to Danielle and explore getting on their platform, because it truly is just like a pitch as you would with any other investor. And if they can open a DAF, they can open it through Neta, and then you're able to really work with them quickly and get capital deployed into your company so you can go back and be heads down.
Aaron, you touch on a lot of similarities between what a DAF donor and a traditional VC look like in due diligencing Mars Materials and then making that commitment. Are there any differences that came to mind between DAF donors and VCs, especially when it comes to impact and impact measurements?
Yeah, that's a great question. So I was a fellow with Prime Coalition, and I learned initially about donor advised funds DAFs from Sarah Kearney and Maggie Cutts. I immediately thought that these tools were incredibly transformative for the innovation space, but I wasn't clear how to tap into them. And if we're thinking about the timeline for how long it took me to get my first DAF investment to today, it was about a year from me really understanding like how to go out and tap into this powerful tool. So I think there's, as we all have mentioned, there's $250 billion in DAFs. But DAF owners don't always recognize what they can do with them. And what I learned from Prime is that there's a huge compliance element on the DAF holders around their GIF. So that oftentimes limits some of the incentive structure for them to deploy these funds because of that complexity. So learning about organizations like Neta and the other cottage industry that's developing around this space was really a godsend. And what that meant from us as a public benefit corporation was then aligning our opportunity with what the philanthropists and the donors were looking for. So in my case, what we did was we demonstrated our additionality. And that is the kind of but for question. Would this climate impact that you're trying to manifest happen without this catalytic capital? So in my space, we really break it down to these few criterion that we hear from financial first investors. It gives them a little pause: high capex, innovation premium, beyond market standard returns. And that becomes our basis for additionality. And then we really use that as a leverage point to then talk to investors who might be financial first, or they may not see Mars as that opportunity quite yet. But then when we open the opportunity for DAFs, their mental framework shifts a bit, because now they're thinking about impact, and they're thinking about how can we help shorten that valley of death so that we can eventually tap into more of the private financial first markets.
Thank you for sharing that, Aaron. Emily, you work with a lot of deep tech and tough tech founders like Aaron at the Engine. From your perspective, how does it look like for founders to work with DAF donors? Any insights you could share with us from your vantage point?
I would say that we are on the earliest stages of that. I think I love that Aaron brought up Prime Coalition. I think we think a lot about how Sarah Carney has created this model, what the first Prime Fund did, and thinking about that but for and additionality. I think the hardest part for a lot of the tough tech founders that we work with is to prove that additionality. I'd even ask Aaron if you could talk a little bit about how you created a repeatable process, if you used tools, if you created your own metrics, because I think that matchmaking can only happen if it isn't too heavy a lift for both the DAF holders and the founders. I also think that vehicles like Neta are the way that we're able to do this in a different way. So I mean, like what we think about every day, there's 130 companies in residency here. Over 70 of them today are fundraising. And we think about speed, like how can we accelerate that process and make it as easy as possible. So Aaron, really hearing about so I know the Prime team well, and they've developed these incredible tools around greenhouse gas emissions and climate. I think we worry a little bit around the human health side of things and the advanced systems with quantum and some of these other, really long to market technologies. How can we help in that arena build the additionality in the but-for cases so that these can look like grant investments, they can look like PRIs, which could look like a loan with very low interest, whatever it may be. I think our role here is to create education on both sides, that there is a market, there are these technologies, and that there is a pathway. So really understanding the process and how like pulling back the curtain on how it can be done. This is a great example on how it isn't hard, repeatable, sort of like give people the ability to pattern match what you two have done here, and then just open up the floodgates. We have 130 companies in residency. We run a early stage cohort twice a year with another probably 200 company or team companies a year. And like those are the earliest stages that need those early patient capital dollars to help. So I actually think, Aaron, hearing a little bit more about the additionality for people who don't know that term or Prime yet would be really insightful.
Yeah, happy to share. So, I mean, for the most part, we had gone through pitching financial first investors and have a database of everyone that we had conversations with and reasons for the conviction that they would get or for the passes. And I think the case for additionality is really built around the passes. And in our particular space, the chemicals industry, because I think, as you mentioned, Emily, different sectors have different, I think, drivers for what demonstrates additionality. And even in the chemical space, I would say that there is some uniqueness. But what we heard around Mars was these really kind of key areas. You have a lot of impact potential that you can unlock. But in order to unlock that, which means that you're moving a lot of product into the market, you need to overcome barriers that are a bit challenging right now, CapEx intensity, the green premium, the innovation premium, the longer time horizons outside of what the market today is asking for. 3 to 5 years seems to be the average now, and more likely for Mars, it's 7 to 10 years of a holding period. That scares off financial first investors. And those were the three kind of criterion that we heard over and over again. So we used that to then build our case, and we went and worked with and spoke with experts in philanthropic capital to then build that case and align that with what is interesting from an impact investment perspective. I think there's a lot more that you can do. We're also supported by the Breakthrough Energy Fellows Program. We were backed by them, graduated from cohort 2 last year. So with them, we had to demonstrate that we can achieve gigaton scale emissions reductions potential. So with that impact potential also aligned there, it gave the why as well for the business case for what we're building towards. And that's effectively what we built. I think there's a lot more that we can do for sophistication. We're also only a team of 4, so it makes it a little challenging.
I didn't mean to put you on the spot, but that was really helpful and really good to hear. Yeah, thank you.
I'm happy to share that. I think this is really important details.
I love this conversation around how founders and venture funds can help lower the barriers for donors to come in and support these ventures. And I'm curious to hear from Jennifer's perspective for donors and sponsors, what are some of the, I remember in my one-on-one with you, Jennifer, you mentioned that venture investments using DAFs is still a frontier applications. It's not widely adopted yet. What changes, Jennifer, do you think we would need to make it easier for sponsors and donors to engage with those investments?
Yeah, so it's definitely a new area. And what we're asking the DAF sponsor to do is a heavy lift. They are going out and meeting with founders, they are sourcing deals, then they are handling the investment due diligence, as has been mentioned. They're also working within a regulatory box in terms of what's required of them, in terms of prudent investor laws, tax requirements, and so forth. And so they're doing this as sort of the back office for their DAF donor, and they have to figure out how to fee for that. And so I worked for a DAF sponsor for about 10 years, and we feed our funds for this level of service. So I think in terms of what would need to change, more DAF donors have to request this of their sponsors. They have to demand it. I think it's donor driven, and I think donors can be the impetus for bringing this to their community if they ask their DAF sponsor. And so being able to partner with a Neta and others is really crucial because it helps unify this very fragmented landscape that we see where every DAF is sort of doing things differently across the board. It's not convenient for founders either. And so it's just really important to be able to try to unify things. It's an opportunity and a challenge all in one. But I hope that answers your question, Jenny.
It does. Thank you, Jennifer. And how do donors and sponsors find these startups today? And what could we change to make that process easier?
Yeah, I think it's a sort of an old school development type of process. I think it's pounding the pavement and networking. I think it's coming to events like this. It's going to events hosted by the Engine and others, and connecting with those that are investors. And not easy, but I think it's pitching your business, just like any other pitch. You're pitching a DAF. And DAFs are beautiful vehicles for this because they're patient, they're risk tolerant, they can think long term. Like Aaron said, there might be a lockout period of close to 10 years. And so it's a beautiful opportunity. And I really want donors to realize that they can do this and to make sure that they're asking their DAF sponsor, what is possible, before I open a fund here. And you can roll it over, as Danielle mentioned, but are there minimum thresholds? Many DAF sponsors require a certain financial commitment before they will do a direct deal. And so we see anything from, 25,000 to $500,000 before the DAF sponsor will even entertain doing this. And so as a DAF donor, you have to think about what is available to me through this sponsor, and what does that review process look like, et cetera. And then I think as a donor, it's also very important to ask, how is impact measured? Truly measured, so you know that you're getting, that you're doing deep impact investing work. And I think it's very normal to hear from your DAF sponsor on performance, fund performance, and so forth. Not always as common to hear back on impact. And so, how much carbon was captured? Really, how many jobs were created, or how many different environmental risks were mitigated, et cetera. And so there's a whole sort of other field related to this, impact measurement and management, or IMM. And so, really important to see how your DAF sponsor is doing the evaluation and bringing that back to you. So that also needs to grow. We have an IMM working group, and we host IMM gatherings for people in this field that are still trying to figure that out, how to do that, and how to do it with philanthropic capital. So I'm happy to share more about that offline with anybody that wants to hear more.
That would be great. Thank you, Jennifer. Danielle, you purpose-built Neta to overcome a lot of these barriers for donors and sponsors. To do this, can you highlight a few things that you have implemented already and Neta, and what are some of the frontier features that you would like to turn into reality in the near term?
You mean some of the opportunities that we funded?
Mm.
Sure. So I'm gonna give an example of exactly how this would work, kind of like soup to nuts. So, because you had asked before about, how would someone discover the company? So, for example, a donor slash investor goes to the Engine, Tough Tech Week is coming up, and they're gonna hear pitches from, I don't know, Emily, 70 different startup companies. And someone gets really excited about one of the opportunities they're seeing, and they are able to express interest, like, I want to make a grant investment into this company. And they realize, oh, I have a DAF, but it's at Fidelity, and Fidelity is not going to entertain me making a $25,000 grant investment into this company. So you bring that company that you're really excited about, that you just heard, to Neta, and you say, here's a company, I want to make a grant investment. We execute on that transaction for you. And then it's on our platform so other people can discover that opportunity. Just to give you an idea of the range of opportunities, we have a for-profit venture capital fund that exclusively invests in children's health technology that we've worked with. We have multiple different investors who came in through Neta to invest in this fund. Once we met the threshold minimum investment for the fund, we were able to add on other investors who otherwise would not have been able to invest because they on their own could not meet the minimum of the fund. So that's one example of something we've done. of course, Aaron's company. We have companies working in financial inclusion and legal technology, and we're really excited about women's health and are going to be launching something very soon, a pooled vehicle around that. And then we also do recoverable grants. So we were just recognized at the DAF industry has one gathering a year, and we were recognized, it was about 2 weeks ago, for the most transformative DAF gift that was made through Neta. And that was a recoverable grant that went to a hospital in New York, Mount Sinai, around neuroplasticity and vision. And we structured it as a grant, multi-year grant to the hospital, and Neta, we negotiated a term sheet with the hospital. So if the work gets licensed or commercialized and there's any upside for the institution where it was developed, then the DAF at Neta is also going to see capital come back in. So that, to some people, is like the most exciting thing, because that's really pre-company. And it's something people are comfortable doing, giving grants, and you normally give a grant with no expectation for a return at all. This is a grant with a lottery ticket attached to it. So it also keeps the donor more actively engaged in some ways, because you're really following it along, tracking milestones, getting updates. And so for us, grant investments are sort of a spectrum of opportunities.
Thank you for that, Danielle. Before we go into breakout room, one last question for everyone on the panel. If we look back 5 years from now and DAFs have become a mainstream source of funding for startup, what is one change that you think we would need to catalyze today to make that happen? Who would like to go first?
Yeah, I'm happy to start. I think that would be a dream, being able to find what I think is an incredible philanthropic private sector solution for innovation that in the US at least has been really stagnant and bottlenecked by our reliance on government support. So I think this could be quite transformative in that regard. So I think to get to that vision of being able to really solve this pipeline issue, we need more awareness around this capital instrument. I think more, we've said it a couple times today, but more conversation around this. And I think there is, and then getting more DAF holders and the impact investors and the philanthropists more comfortable with this instrument too. I know sometimes I talk to folks and they're a little concerned or skittish about abuse of it. But I think if we're able to apply some of the criterion and really rigid structure we talked a little bit about today, I think that can help minimize some of that. And for the chemicals industry, I think that it will fit into what is a greater just blended capital stack. And that's also something that we shouldn't lose sight of. This is one tool of many to help get companies to commercialize their full commercial potential.
Yeah, I can jump in. I think I would double down on what you said around awareness. I think sharing wins, pattern matching is always very easy. Like the more ways in which we can showcase this happens, it's for all of the DAF holders out there to think that they could actually this becomes like crowdsourcing in a little bit if they feel like they then have the power. I think that the tools that Neta has created to make this available in the platforms, I would say Prime does a very good job of this as well. I think making those more readily available. There's, probably some sort of policy too around putting minimum investments for DAFs and creating more movement there. But I think there's in companies like Mars Materials, we have quite a few here that are really impact driven first, will create wonderful returns in markets, but they are thinking about sort of human health and reforestation and all these really impactful technologies that see no other pathway than venture. And so this creates a new pathway for them. So awareness, sharing the wins, we're doing that here today. And more platforms that are thinking creatively like Neta in leading the way there. I think that's what's really important.
Jenny, I can jump in. I believe that again, it's going to be demand driven by donors that are asking for this, that are helping if they're working through their community foundation, for instance, they're connecting their community foundation to organizations like Neta. Also another Mission Investors Exchange member that I can think of called CapShift that works with a number of our community foundations behind the scenes to help activate donor dollars sort of behind the scenes in another platform. And so, the growth of these platforms will be crucial, but I think it's donor driven by donors that are demanding it and also asking for accountability and transparency on the reporting. So the IMM working group is one that I mentioned. We also have a health investors group specific to charities that are doing this on the health investment side. And there are all sorts of frameworks and reporting processes that they're going through. And if you've heard of not only just the SDG goals, but there's IRIS Plus, there's a number of different frameworks. And so trying to figure out what works as an industry so we can show collective impact is just crucial. And I think that is the future of where some of this is headed. So back to you, Jenny.
Danielle, did you have any last word you wanted to share?
Just to reiterate, education, this is something that is a little complicated. And I hope that all of you frontier pioneers on this can help us sort of share this vision and mission that we have in being able to use philanthropic dollars in a new way.
Great. This is a wonderful segue to breakout rooms. I'll pass it on to Mackenzie to help facilitate that.